Welcome to today's market report. European stock markets was largely flat on Wednesday, with investors keeping a wary eye on developments surrounding the coronavirus while monitoring the US political turbulence. DAX in Germany traded 0.1% lower, CAC 40 dropped 0.1%, FTSE 100 climbed 0.1%. The near-term outlook for the European economy darkened somewhat on Tuesday after a report by the newspaper Bild suggested German Chancellor Angela Merkel wanted to extend the current lockdown in Europe's largest economy through the end of March. It seems the December trading enthusiasm, driven by the prospect of a global economic recovery, is now being offset by alarming COVID-19 numbers, as well as valuation concerns over stocks that went far away from their equilibrium price. That said, the underlying tone remains positive given low interest rates globally and monetary and fiscal stimulus from central banks and governments alike, as well as the idea that vaccinations are coming. Later Wednesday, the US House of Representatives is set to vote to impeach President Donald Trump over the recent turmoil in the US Capitol. Vice President Mike Pence resisted pressure on Tuesday to invoke the 25th Amendment to remove Trump. An impeachment trial could proceed even after Trump leaves office on 20th of January. Back in Europe, Telefonica stock rose 7.5% after the Spanish telecom company agreed to sell its mobile phone masts in Europe and Latin America to US-based telecom infrastructure operator American Towers for 7.7 billion euros in cash. ASOS stock rose 3% after the retailer posted a better-than-expected trading update, while Carrefour stock climbed over 6% after it merged that Canada's Couche-Tard was in talks to buy the French retailer. November industrial production figures for the Eurozone are also due. The Euro area economy is poised to shrink again at the start of this year as the resurgent coronavirus plunges the region into a double-dip recession. Oil prices continued to climb on Wednesday, boosted by industrial data showing a hefty draw in US inventories, again suggesting that the US measures to contain the latest surge in the pandemic have had less effect on demand than those in Europe. Crude futures traded 0.3% higher at $53.37 per barrel. Brent rose 0.5% to $56.84 per barrel. Gold futures rose 0.7% to $1,957.35 per ounce. On the FX front, the GBP-USD pair has been advancing amid bond-related dollar weakness and BOE hawkishness, but the initial surge above 137 may prove short-lived. Despite good reasons to rise, GBP-USD received a draw boost on Tuesday. First, Bank of England Governor Andrew Bailey stated that negative interest rates are controversial, seeming to put the discussion to rest. The second booster came from a 10-year Treasury auction in the US. Investors were eager to purchase American debt in a reversal from the sell-off in previous days. Investors have also taken note of the UK's accelerated vaccine campaign. Coronavirus continues hitting the UK hard, with hospitals using more and more ventilating machines from severely ill patients. Wednesday's data may prove more worrying. While the EU and the UK agreed on how to manage goods, they left the larger services sector to future talks. These negotiations begin on Wednesday with little appetite from Brussels to make concessions on finance, Britain's critical export sector. Any acrimony could hurt the pound. GBP-USD continues trading in an upwards channel and is nearing the 2021 peak of 137.05, also the highest since 2018. While momentum on the 4-hour chart is positive, the relative strength index is hitting the 70 level, entering overbought conditions. That may result in a downside correction. The UK-EU free trade agreement is welcome in that it avoided a hard Brexit for merchandise trade. However, trade friction has risen and the government has yet to clarify its post-EU industrial strategy, which needs to be focused on productivity. Beyond a relief rally, the FTA does not provide a compelling reason to buy GBP now, according to the ANZ Bank. Euro-dollar saw a quick drop below 122 on the 4% drop in the fourth quarter of 2020 for France, and Germany's health minister indicated impossibility to lift all restrictions in February. The dollar index was steady at 90.004 after falling 0.5% on Tuesday and is not far above last week's nearly 3-year low of 89.206. This is today's market news. Thanks for listening. We'll see you next time.